All right, it's time for business news, and the gentleman who abandoned me some days last week, he's back, Emmanuel Abaju-Yafe.
Yes.
Good evening to you.
Good evening.
Good to have you back.
Yes, I was a little indisposed.
Yeah, sure, that's fine. All right, so what's coming up?
Well, coming up, the Monetary Policy Committee of the Bank of Ghana has decided to reduce the policy rate to 25.5%.
Okay, and you are betting that is going to lead to a reduction in interest rates?
Sure, marginal reduction.
I doubt that's going to happen.
Marginal reduction.
I doubt that's going to
Why?
happen. It's by 50 basis points.
Yes.
And they're unlikely to be moved by, they consider a lot of factors
Yes.
before moving the interest rates. And especially, you know, because it's an election year, we're just close to the elections, I doubt it would impact that much.
Well,
interest rates are about what? 30-something percent,
32,
right?
33%.
Yeah.
And cost of credit has for some time now gone up so much because of the interest rates. And private businesses have been clamoring for this policy rate to come down.
Anyway, let's
so
see
at
how
least
it goes.
It's some good news.
Let's see how it goes. You take it away.
All right, thank you very much. And thanks for joining me on business. The Monetary Policy Committee of the Bank of Ghana has decided to reduce the policy rate marginally. The committee dropped the rate by 50 basis points to 25.5%. This is the first time since June 2011 that the bank has reduced its policy rate, which often influences cost of credit. Addressing journalists after a meeting to review the health of the economy, Dr. Abdul Nasiru Isahaku, the governor, said the action was influenced by a favorable outlook for the economy.
The outlook for inflation is broadly positive, as reflected in the continued decline in the underlying inflation, stability in the foreign exchange market, low aggregate demand conditions, and general high real interest rates. Growth conditions remain weak and below trend. This is underpinned by weak global demand, declining commodity prices, and disruptions in the production of oil and gas. Other factors include weak private sector credit growth as a result of the tight credit stance and fiscal consolidation efforts. These tight conditions are expected to prevail in the outlook. With these considerations, ladies and gentlemen, the committee concluded that the downside risks to growth outweigh the risk to inflation, and therefore decided to reduce the policy rate by 50 basis points to 25.5%.
Now, on this same development, economist Professor Peter Quartey has been assessing the implications of the reduction in the policy rate on the economy and for businesses. He spoke on the marketplace.
I think it is, especially in an election year, given that we are in the last round of few days towards the elections. Normally, and also towards Christmas, you see a lot of demand for foreign exchange, you see a lot of economic activity, spending, and the rest. But so far, the inflation rate, the exchange rate movement have been quite stable, I must admit. So I think it's in line with this, that a reduction or in the policy rate is quite acceptable at this point. We have to be a bit cautious, though, because sometimes it is after the elections, perhaps the first quarter of 2017, that we see some of the numbers, the real numbers. But for now, I think compared to previous years, we've managed to contain inflation and exchange rate movement. But the bank rate, lending rate, etc., depends on several other factors, including the policy rate, the default rate, for instance, and many other factors, their cost of operation. So it depends on what proportion, how significant. This is quite marginal. So it's very unlikely that you see any major change coming from the banks. I think the default rate and other factors are quite significant.
Away from that, the president of the Association of Bank Treasurers and Currency Dealers, ACI, Amagati, has assured businesses not to panic over the recent significant depreciation of the Ghana cedi, saying measures by the central bank will bring more dollar inflows to correct the situation. In an interview with Joy Business, Amagati was optimistic the central bank's measures, including the directive for exporters to repatriate their profits into the country, as well as other options, will help stabilize the cedi.
No need for panic. There isn't. Like I said, with the FX auctions coming up, we'll see more inflows. You know, also Bank of Ghana made it such that all those exporters repatriate their proceeds back into the country. Initially, we didn't see so much of that, but I think that is starting to pick up. That should increase the inflows that are coming. If the supply starts improving, we'll see some stability on the market. There's no need to panic.
Explain to me how this whole auction thing that you're talking about is going to work out. You're going to start from the end of November. How is it going to work out? Which you believe that it would have an impact on the Ghana cedi?
Okay, so the central bank is going to make it such that banks will bid for FX from them. And they are using the Reuters platform in doing this. So if they come onto the market and they say, oh, we have this amount on the market, and then all banks are to bid their price for it. So I think with that, we'll see more inflows coming into the market. If they have, you know, there were talks about the cocoa money coming straight to commercial banks. However, are the banks ready to take that amount of FX? No, I wouldn't say we are. If it goes to the central bank and is auctioned back into the market, I believe we'll have the necessary inflows we need to cater for the demand that we are seeing now. So that should be able to stabilize the.
Now, latest financial and economic data released by the Bank of Ghana show that the public debt has reached a little over 112 billion cedis as of September this year. Now, George Yafi, who has been studying the report, however, says there appears to be some discrepancies in the real margin of growth in the debt numbers. Details in the following report.
The Bank of Ghana's report ending November shows that from July to September, the debt numbers have gone up by 6.2 billion cedis. However, when you look at the same Bank of Ghana's report released ending September, the growth over the past 2 months was 2.6 billion Ghana cedis. This is because the amount quoted by the central bank for the public debt in their previous report as of July was 109.8 billion Ghana cedis. However, when you look at the latest report, the bank says the debt as of July was 106.2 billion cedis. Attempts to get clarity from those who are responsible for the debt numbers have been difficult. However, a source close to the Bank of Ghana says their figures are based on numbers given to them from the Ministry of Finance, so they cannot be held responsible. But if you go with the November report, then the 112 billion cedis public debt accounts for about 67% of the total value of the economy. That is the debt-GDP ratio. For some, the current development could mean that Ghana is likely to meet the IMF's end-of-year target of debt-GDP ratio of 66%. This could influence the rating agencies to review Ghana's creditworthiness to a favorable position.
Now, the Advertising Association of Ghana, AAG, is making a fresh case for the speedy passage of the Advertising Council Bill to be passed. According to the association, the bill holds the key to improving the fortunes of the industry to the benefit of the economy. President of the association, Joel Neti, spoke with Joy Business at the 10th edition of the Gong Gong Awards ceremony held over the weekend.
We've been speaking about the Advertising Standards, Advertising Council Bill for a while. What that does is that it will help us put regulation in our industry. What it is right now is that today we self-regulate. So the Advertising Association of Ghana has an ethics committee that looks at the various challenges that we have, various complaints that we get, and then we try and manage it. But of course, it's an association or it's a committee of peers, so we don't have the bite. So even if we say agency X, you've done wrong, it's a warning, it's this, that, and the other. We don't have the power to sanction. And that's what the Advertising Council bill will do. And it's not just for advertising agencies. We have advertising agencies in there. We have the consumer represented on there. We have the clients represented on there. We have the media houses represented on there. So essentially, if there's a problem with, let's say, an ad that shouldn't be airing on a particular radio station, maybe it's not child-friendly, we can, with the passage of the Advertising Council bill, a radio station that's airing an ad that shouldn't be aired at a particular time can be held responsible. A TV station that's showing an ad that has bad scenes can be held accountable. The agency can be held accountable. The client can be held accountable. The media agency can be held accountable. The media house can be held accountable. That way we're in a better position to clean up our act. Look at the clutter around billboards in the country. Everywhere in the civilized world, there are rules that govern the use of billboards, distances from the road, distances between each other. Why are we not able to do that here? Because nobody can hold anybody responsible. We're hoping that with the passage of the Advertising Council bill, we'll be able to clean our act and be able.
And that's all for business for now. Do make a date again tomorrow for more business news. My name is Emmanuel Abuaji. For more business news information, you can log on to myjoyonline.com/business. Good evening.